Well, the question that I have, if you look back when I came into the business, which was 44 years ago, of course I was only 12 at the time, and you look at how we were trained, and you talk about the need for professional advisors and bringing in new blood, where's the training going to come from?
There we go.
It's a great question. I'll go. Well, I think that's that's been talked about for the last 10 years. I've made 4 or 5 presentations on it myself, and really, I think the issue is that that first of all, the insurers many of them got out of the sort of career development business because the industry was changing, was becoming more competitive. And they were not able to really recruit and retain advisors in a profitable manner. So, there was a few companies, one of Phil's sister companies, London Life, for instance, Clerica, Investors Group, that were, really had a great model and were able to sustain. But a lot of companies kind of, didn't do it as well, and they decided, well, as advisors age and the demographic moves along, we want to target that demographic, and they went to the independent advisor. There's some really good examples of companies that did that, have abandoned the career development business. That's now created a problem where we have an underserved market of people between, say, 20 and 45. We don't have enough new advisors coming in the business. A lot of the advisors coming in the business are not properly trained. We're in a sales business, in the insurance business. We're in a sales business. They're not getting the sales training. They're selling more. They're buying books of business, sitting on books of business, making an income, but not growing the businesses. And the consumers are underserved. And the big challenge we're going to have if that happens, that's going to be the perfect entry for the banks, right? We're opening the door for the banks. And so the challenge for firms like mine or other MGA organizations and insurance companies is how do we collaborate to make sure that that doesn't happen? So I think I would see sort of a collaboration between insurers, MGAs, and also colleges and universities to develop programs so that people can come out with the knowledge, and then you can take that knowledge and help them develop the skills to grow the business and to serve the consumer. Because the bottom line is we have to get out and sell more insurance to more people, and that's really that's our challenge.
What I'd add there, I guess, from my personal view on that is, companies did training programs before. We recruit individuals, but we all had to make decisions. We weren't growing the business to the level that we're growing it today. And it's not a company issue per se, in my view. I don't think it's an MGA issue either. I think it's an industry view, is what my beliefs would be, that we all need to work together. Now, we've had lots of discussions with advocates, with CALBA as well, with carriers in terms of, how do we deal with the issue of getting more people in the business and of the training. And I think everybody's got to invest. And, the carriers move from that captive audience, if you want, the majority of them. We did a Canada Life, and working with the MGA. So I think we do some product training, some sales concept training, but the essential sales skills, we haven't been doing that. And I think some of the MGAs are doing it, and some aren't. It's an industry concern. It's not a particular, audience.
Thank you. So with the boomers now starting to retire and with the wealth they've accumulated, how do you see them dealing with it, and how does the industry help them? Paul, do you want to start with that?
It's sort of the de-accumulation phase. When you think about it from a business model, you've got your market is clients that are starting to spend their money and then pass away. It's not in some ways it's not a great business model, but I think that really the big word now on the street, if you open up an industry magazine or publication, every third word is income, right? Everybody's selling income, and everyone's got the best income solution. And I think so that's really one of the big challenges for us as advisors, is to helping clients sort of work their way through all these options and to maximize their the efficiency and the nature of the cash that they're going to be pulling out of their retirement products. And I think that speaks to, as Phil said earlier, about the value of advice versus going to a bank and dealing with a different person every 3 weeks, sort of thing. So, I think also our products are geared, the good thing is that the insurance, as we've talked about, the insurance business and our products are geared to long-term, security planning, income planning, and also, a succession planning. So I think it's just, it's just incumbent on us as an industry to make sure that we continue to serve clients, give them good advice, and make sure that they've got the kind of products they need to maximize their retirement and their estates.
The wealth market in Canada obviously is huge, and there'll be a lot of transfer of this intergenerational wealth, et cetera. And products have been in existence from day one from the insurance companies. Payout annuities were good. They're good today. Clients like to receive a guaranteed income for life. They like to know that check's going to come in on a monthly basis regardless of what happens in the marketplace. So there's some security there, and they're willing to pay the price for that security. You've seen the withdrawal products, the lifts, the RIFs. That's changed over the years. Recently, 4 or 5 years ago, I guess in Canada, the introduction of the guaranteed minimum withdrawal benefit, and that's gone through different stages already, and it's only been out there for 4 years. So products will continue to evolve. We try to understand the needs of the consumers and work with advisors and saying, how do we make the products fit? And that doesn't only mean necessarily withdrawal products. You're going to look at insurance, and how does insurance help with the retirement market as well, and with the wealth market, because there's lots of opportunities there as well to meet the needs of the clients. So I think you'll see a lot of evolving in the payout phase or the income phase, as Paul referred to, over the years. But we got some basic products there. Again, you got the spectrum, right? You got the fully guaranteed with the payout annuity, and you got the other extreme, which is just the withdrawals. And our view is the clients, the advisors are in the best positions to do a recommendation to the product. I personally don't think you should need to put all your money into one product in itself. You don't put all your money in a payout annuity, you don't put all your money into a straight GIC, and you don't put all your money into an LIB, an income benefit type product. So it meets certain needs. You have to understand what your client's needs are and respond to those.
Thank you. We've come to the last question. Do you see the insurance industry moving away from risk products to focus primarily on wealth products? Who wants to take that one first?
I'll give you my 2 cents on that. I can see us focusing on the wealth business for sure. That is a big market out there, but not at the expense of the risk product. Primarily we've been an insurance company from day one. We started insurance. We've served the test of time there. We've got our PAR product, and you don't necessarily, although the opportunity on the wealth product is huge, on the insurance side as well. And I think the two can actually go hand in hand. You can work with the insurance risk products to supplement or to ensure the payout of the wealth products as well, either during the accumulation phase or the deaccumulation phase, because if you have the insurance in place, it allows you to spend your money without having to worry about the capital being left to your beneficiaries. And you go back, remember my first day in the insurance industry, a little bit after Jack, the first thing they told us was, what do you buy insurance for? Like, what does the industry need? It's to provide income if you live too long, in case of money, in case you become disabled, or in case you die too soon. So you can create the wealth, and you can protect the wealth. So I see those two products really going hand in hand. And I don't think we necessarily have to focus, while focusing on one, you eliminate the need and the focus of the other product. I really believe that, in my view, the two work really well together, and there's an opportunity in both sides of the equation. As if, the wealth is going to grow. There's lots of money there. Opportunities are developing every day. Insurance as well. How do you protect it, and how do you create the estate? And tax planning, you got to deal with tax issues, income issues, transfer of wealth. So I see there's huge opportunities in both lines.
Well, I'm pretty much going to say the same thing as Phil.
Only better?
I might say it better, but yeah, pretty much the same thing. I think, as you said, risk products are the foundation. They're called life insurance companies, not wealth management companies. And I think, so I don't see any insurance company other than one that recently did it, and you could speculate why they did, but getting out of the risk business, because it's the foundation of our business. It's what we're trained to sell. It's also, I think, the risk there's more opportunity in the risk business because there's a huge underserved market. It's been well documented by LIMRA. They think they put out a document called the $1 billion baby about how there's a huge hole in the 25 to 45 market that's not being serviced, right? So there's an opportunity in the risk market. Like, if you look at everybody and their dog is in the wealth management business. Like, my parent company's in the wealth management business. Phil's sister companies and parent companies are all in the wealth management business. The banks are the wealth management business. Like, do we want to compete with banks? Go head to head, we'll get killed. Our strategic opportunity is in the risk business. So, there's no way that we should throw the baby out with the bathwater, for sure, right? And I think also the risk business, although, as we've talked about, there are some challenges in the risk business, I think there's great opportunities. If you look at what the biggest issue today is, people living too long. Living too long means that people are going to need critical illness insurance. They're going to need long-term care products. They're going to need different kinds of life insurance products. And I think we're continuing to see a lot of innovation from believe it or not, insurance companies can be innovative. I think we're going to continue to see innovation, and certainly but the wealth management business is attractive because it's a potentially exploding business, and it's a very profitable business. Insurance companies, as I said earlier, a lot of them gone into the mutual fund business because they have the distribution. Mutual funds is still a growing business. There's not a lot of capital required to be in the business. It's a high margin business. So there's an appetite, and I think Phil said this, an appetite to grow the wealth business, but I think there's also an appetite to grow the risk business. And I think for us, the real opportunity for us is to continue to have a strong hold on the risk business in Canada and not let the banks in it.
Well, Paul and Phil, thank you very much for sharing your experience and your insight with us, and very informative. Thank you.